Hey guys, it's Paul. And if this is your first time tuning in, I bought a hotel at 25 and normally our channel focuses on the remodel of that hotel. But I've been noticing some trends in the market lately that I think are pretty important and there needs to be more light put on it. So that's the purpose of this video. If you like this type of video and you'd prefer if I were to start shuffling some more of these in between my updates to the hotel remodel, leave a comment and just say, hey, I appreciate this. This was helpful for me. I like this kind of material. Please press that like button because it really does help us get to that goal of 1,000 subscribers.
Stay tuned to the end to see how the rich get richer during these uncertain times. Money is an interesting thing. We all want more of it. But the more we have of it, the less it's worth. Inflation theory goes like this. The more money a person has, the more goods and services that person is willing to buy. With stimulus, you're giving everybody more money. For a short period of time, you just have a very happy economy. You have sellers selling more stuff, buyers buying more stuff. It seems great. But at a certain point, sellers can't keep up with the demand. So sellers raise the price to reduce the demand. When you see this happening back to back to back, it's cause for concern. Okay guys, so this is the Consumer Price Index, and it's the way we measure inflation. Positive numbers are indicative of inflation, negative numbers are deflation. But during a lockdown, it makes sense for the ones that are negative to be negative. Now, if I'm seeing this, you better believe that other people have seen it also. Let's look at some of the billionaires and how they're positioning themselves. Basically, how to win when the dollar fails. We've all seen this article, or at least heard about it. Bill Gates has now become the largest farmland owner in America. Bill Gates has 242,000 acres of farmland, 27,000 acres of other land, in over 19 different states. But guys, he's not the only one to be doing this. Ted Turner has over 2 million acres of personal and ranch land. Do you guys remember back in 2017 when Forbes was pointing this out to everybody? The reason all these billionaires are buying land all of a sudden, it is the best way to hedge yourself against inflation. If the dollar is worth less, your land is worth more. If you bought it with debt, heck, that debt is worth less. It's a great solution. In fact, these guys aren't even the first ones to think of this. Back in the 1920s, there was a guy by the name of Hugo Steins who did an awesome job profiting from the hyperinflation in World War I. You see, he saw ahead the issues that were coming and decided to start buying assets on debt. And then he repaid it all at the end of the war using the worthless German currency. Side note, the German currency is worth so little that companies had to issue their own currency. Here's an example of what Steins issued to his employees to buy stuff from the company store. Anyhow, if you want to learn more about World War I, the hyperinflation of Germany, and how these people were able to make money during that particular time, I'd suggest reading the book. I'll leave it in the description, When Money Dies. Bill Gates, Ted Turner, they're playing by the same rules, and they're going to win when the dollar fails. Okay, back to 2021. We know that we have some inflation that we're expecting to see from all the stuff in 2020, but we're doing stuff that's going to create more inflation here in 2021. Here's what's on the agenda. Stimulus package number 3, estimated $1.9 trillion added to the economy, would get everybody an additional, $1,400, which is great. I mean, free money, yay, but was it due to the value of the money that's already out there? Also, the other thing is, and this will have a bigger impact, raising the minimum wage to $15 an hour. He just did an executive order that made it mandatory for all federal workers, which I'm sure they're pretty much getting that anyway. But if that actually does become the federal minimum wage for everybody, then that'll have a drastic impact on the economy. Again, it goes back to that idea of if it costs me more to produce a good or service, then that forces me to raise my price. Anyhow, I'm sure there's lots of other new things that are going to be coming out in 2021 that'll affect inflation. These are two major things that should affect inflation. The way to fight inflation is to buy assets, things that retain their real value, things that have an intrinsic value, such as land. Gold, silver are obviously the go-to in this kind of situation. It's kind of interesting that gold and silver haven't gone up yet. In fact, it went down after Biden won the presidency. A little bit strange to me. Yeah, everybody knows Warren Buffett, but who's that other guy? Well, that's Charlie Munger. He's Warren Buffett's right-hand guy. Okay, so I'm going to wrap up this inflation period with a couple quotes that Charlie Munger said inside of an interview with Caltech a couple weeks back. He said, "We're in very uncharted waters. Nobody has gotten by with this kind of money printing now for a very extended period without some kind of trouble. We're very near the edge of playing with fire." He also said, "I can remember having a 5-course filet mignon dinner in Omaha for 60 cents when I was a little boy. The world has changed a lot." Okay, moving on. Let's talk about the stock market. It's pretty high. So 2020 came with a lot of fun. We were stuck at home for a good portion of time, and they sent us some money, right? Well, a lot of people that didn't actually need that money end up throwing that money into stocks. In fact, you've had a lot of commentators like Meet Kevin on YouTube, or another YouTube, Stephan. They're pushing for people to actively enter the stock market, either through Webull or Robinhood. So we've had a lot of inexperienced investors join the stock market. Inexperience by itself wouldn't actually affect the stock market. Again, the idea of the stock market is exists the realistic evaluation of the price point of a stock, right? But when you have people voting on what they think is the most popular with their money, you have things like Tesla, which, my gosh, I wish would have got in at the beginning of the year when I originally thought it would be a great idea. Tesla was trading at like $110 a share in February, and I thought that was a little undervalued. I figured we'd see maybe an increase to $200 a share by the end of 2021, and instead we have it trading at like $850 as of today. So the question is, was Tesla just crazy undervalued? Or is this sudden, rush to buy Tesla stock fueled a bubble? Again, this is one stock in particular, but it is kind of indicative of the market. The market was at an all-time high. It crashed. Everybody said, "Hey, look, it's like the stock market crash back in the 1930s." But the problem is the stock market crash of 1929. It didn't actually. The market didn't recover until I think it's 1954. So what the heck is going on? We shouldn't see a recovery within a year. There's something fishy. There's a giant red flag right now. And unfortunately, people aren't really pointing it out because they're so involved and so excited about the possibility of getting rich, because you think, oh, well, we're just going to keep going to the moon. We're going to the moon. And anytime you hear somebody saying we're going to the moon, you have to say, oh man, this is not good. This is a bubble. This is massive speculation. We need to get out. And when everybody starts getting out, that's when you see a bigger crash. And I challenge people like Stephan and Meet Kevin. They should be warning people and maybe encouraging them to listen more towards people like Charlie Munger that are saying, look, the way that we've gotten rich is by not being stupid more times than we were right. His exact quote was, "The single most important thing that you want to do is avoid stupid errors. Know the edge of your own competency. That's very hard to do because the human mind naturally tries to make you think you're way smarter than you are." Today, Jeremy Grantham said that Biden's $1.9 trillion stimulus plan will make the stock market bubble even worse. His argument was, again, the $1,400 boost to stimulus checks. Well, there's going to be a large amount of that going back to the stock market. So a lot more speculative spending, a lot more of driving up things past what they should be at. And again, the idea of the stock market is it's the invisible hand that helps us figure out what the true value of a company or a share of a company is actually worth. But if you go back to the fundamentals of the company and it's worth $100,000 and for some reason it's trading at a value of $200,000, that company is overpriced. Couple last thoughts here. I just wanted to point out that pretty much anywhere you look on Zillow, you're going to see the price of housing over the last year has gone up by about 10%. I know nothing at all about Bitcoin, so I don't know. That's a different video for somebody else. But we have inflation coming. We have one way to counter inflation, and that's to pop a bubble. You can either pop a market bubble, or you could pop a housing bubble, and that should cause enough deflation to offset the inflation. Some things to think about, especially in the interesting year we had last year, it wouldn't surprise me if 2021 was even more interesting. Oh no, okay, doom and gloom, yada yada. So what the heck can we do about it? We don't own billions of dollars of assets. Okay, so number one, it's, just be ready. Prepare yourself by reading through what the actual experts are doing. Realize that they're warning of a big failure in the system. Invest in assets, things that'll either make you more money or that have an intrinsic value. Again, we do silver. If I could afford gold, I'd say gold is a better way to go. Also, I do rental properties. Rental properties are a lot better way to go. It's just this year, everybody's buying rental properties because they want to flip it, because everybody wants to do, they see the housing bubble coming again. So, right now, I would say empty land if you got it, if you can do it. Don't buy something that's overpriced, but buy something that has an intrinsic value. And I know that this isn't exactly a Dave Ramsey mindset type thing. Not going to lie, I am more of a Robert Kiyosaki fan, and I try to throw in some Dave Ramsey stuff from time to time. But Robert Kiyosaki, he got rich off of the last the last housing crash, and it's because he was able to borrow. He borrowed a lot of stuff, and when you see inflation over time, his debt goes down, his asset value goes up. This is what he's recommending right now, and he was actually recommending cryptocurrency before it really took off. But this is what he's doing. I'm definitely not going to be getting into Bitcoin just because I don't understand it enough. Anyhow, guys, those are my thoughts. Those are the trends that I see. Hopefully you guys got some value out of this video. If you did, please press the like button and consider subscribing. Again, leave a comment if you enjoyed this video and you think I should do more like it. Thanks.